The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX. As you can see, we had a really nice ABCD pattern to the downside. We've had a pretty good bounce here for the last couple of days. If we take a look at the FTSE, you'll notice that we had a beautiful Gartley pattern coming in there just about 4 days ago at the exact 61% retracement at 72.27, and we've had a little bit of a rally of about 70 DAX points, which is rather small considering this thing really jumps around quite a bit. But remember, there's a lot of things going on in Brexit over there, and that really has all the news. So that's very important. Boys and girls, I have a very, very important announcement for you today. I have written a new book, and I'm going to let everybody in the den have it for the reduced price of $150. It's a 200-page book on the politics that are going on in the United States of America. And so it'll be out very, very shortly. So you can get it at the pre-publication price of $150 if you send the money in today. If you don't send the money in today, the price goes up $150 a day for the next 10 days. Most of the books have already been sold. Oh, I just found out all the books have been sold out. I'm sorry, folks. That's it. You'll have to get it on eBay because the books are gone. Oh, they really went fast. Hard to believe. Anyway, if you can believe that, I still have 2 shares of the Brooklyn Bridge available for you. Let's take a look here at what I think is happening in the stock market, folks. We've got to go back to a long time ago. Let's just get up here. I want to explain to you just a little bit of what I'm seeing because I know we're up near the highs. If we go above that 2920 level in the S&P, then all of this stuff is wrong, but you know, I'm not sure that's yet. This is where we were back in 2007. You'll notice here in 2007, in early September, we made a new high. You'll notice that period of August the 15th. That was one of the most amazing days in the stock market that we had in a very, very long time. I happened to be in Las Vegas. I was a guest on the TFNN show, and Skype, one of the few times that it had ever been out. And of course, it was out that day. But what was interesting that day, the Dow was down about 350 points on that day, and yet the Russell 2000 and the NASDAQ, the Russell 2000 was actually up on the day, but the NASDAQ was down just marginally. The S&P was down about 25, I believe. We went up and made new highs into early September, and then you see what happened. We had the big break coming down. And of course, at that time, Mr. Bernanke came out and said that all lights were green. He didn't see any problems anywhere in the economy. It looked like we were going to go a lot higher. If you don't believe me, you just go on the internet and pull out his remarks from back in those days to see if that's going to happen. But this is only part of the problem, or the what I think is an opportunity here. But you know, a lot of these things are wrong. If we take a look at this, the next chart is a long-term monthly chart on the S&P, and I just shows the parallel channels. These are basically Andrew's lines, but it shows you the symmetry that is there in the lines. And this is all part of the reasoning why I'm looking at some of these things as far as a potential for a major top in here. But we're seeing a lot of different things that are coming together. That's why I try to bring this to your attention, you know, to try to, you know, I'm not going to try to teach anybody how to suck eggs or anything, but I'm just trying to add a few things to your armamentarium that might say, oh, maybe pay attention here because there might be something to this. Now, one of the things that has happened this past few days is they're really talking about Goldman Sachs and how bad it's been. It's one of the worst. In fact, I heard it on Bloomberg yesterday that it was the worst down move that Goldman Sachs had in its history. Now, let's just go back. Let's don't go back too far in history. Let's just go back to, let's say, 4 or 5 months ago into May. Okay, now look at the high that we made in May. You'll see that big red line right there. That was just showing you what the high was in May. Look how the market came down. It came down 12 days. Go back into June. You see the high? It came down 12 days. Go back to where we are now. On the 27th of August, we made a high. How many days? 12 days. Come on, boys and girls. This is nothing new. This is not the person that tells that doesn't do the homework. There's just not, you know, this is not it. You know, that's just not, that's not the way it is. Now let's take a look at let's look at the banking index. We want to do the old Woodward and Bernstein thing of follow the money back in the old days of Nixon. Uh-oh, are we out? Shut the front door, are we? I don't know. Let's double check here and see if we are. No, we're running. Yeah. I don't know. I guess I can hear me. Anyway, you can see the banking index is in big distress, and you can see it's headed down. And guess what happened in 2007? The same thing that was happening. So just keep in mind that some of these things might pop up, and we'll see whether it's going to be. Some people had trouble with the sound, but it looks like we're getting it into vogue again to start working. So we'll do one thing at a time. But what we're looking at here in this banking index is the fact that we're trying to follow the money. Look at Goldman Sachs. It's had a big down move, way oversold. The last 3 times it's been down 12 days, it had a nice rally. Whether that'll happen or not this time, we don't know. But look at the banking index, how negative it is. And this is when the market's going up, and this is where the money is. If the banks who handle the money are not making money, what's going to happen when other people say, something's not right with this picture? It's just part of another little puzzle that might be there, maybe not, but this is what I'm seeing on a long-term basis. The fact that the market went up on some of these indices and made a new high like we did in the NASDAQ really doesn't mean a whole lot to me, because that's only a few stocks. We've talked about that many times, and I don't think that that's going to change anything at all. But if we get that S&P to close above 2920, then I would say yes, there's a possibility that that could be happening. But just look at the overall broad market here for just 1 second, folks. Just take a look at this. This is the New York Stock Exchange Index. You'll see the blue line on top is the NASDAQ. The NASDAQ, you can see 3 distinct tops. As you can see, we haven't made a new high as of yet, but we're close. And we made the three drive to a top pattern. We're lagging badly in the rest of the market, as you can see. So it's just another little piece of the puzzle. Whether the puzzle is right or not, I don't know, but nobody else knows either. I'm just making an educated guess of what I think is happening, and that's all it is. It's an educated guess. All I know is that the risk at this level is very, very small compared to what the profit objective is. We're going to have a little break coming up, and then we need to talk a little bit about the currency markets, because as you remember, we were coming into that 117 yesterday in the euro, and that was pretty significant spot. We'll look at that in just a minute. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, someone asked to post a chart of that Australian dollar that was making a three drive to a bottom pattern. We also focused on the newsletter this past week. We had 3 extra charts on the Australian dollar. We had the long-term weekly, we had the daily, and the 4-hour showing you that that three drive to a bottom pattern was lining up pretty well. Now remember, these patterns do fail. They do have a high probability of working, but when they fail, they go a whole lot lower. So it's very important that you use stop protection or some type of a way to keep yourself from getting damaged when these patterns fail, because when they fail very, very badly. That's where these trends become extremely strong. So you don't want to stand in front of a falling knife. There's another one that we talked about early this week, and that was Alibaba. If you'll notice here on Monday, we've rallied over 14% this week in Alibaba, and that was during the time when Jack Ma was, getting out of the company, or in next year he is anyway. So that's what. That's what you're really looking at. Now, if you're interested in, I'm going to send you another belated Christmas present here. We're going to look at the same pattern now, and this time it's going to be on Christmas wheat. And Christmas wheat hit 496 yesterday. We're now trading at about 505, but that is a three drive to a bottom pattern. It also happens to be the 78% level on the contract low going back over a year. Now, maybe it doesn't mean anything or not, but when you add it to the three drive to a bottom pattern, possibly there could be something there that would make the market rally from this level. I mean, they've hammered these things quite a bit. There's also the possibility, folks, that maybe these tariffs are not a bad thing. I mean, the stock market certainly doesn't think they're a bad thing. I mean, everybody on the news, if you listen to every single pundit coming on the news, they're all negative to these tariffs. They think this has to be extremely bad. Well, they've been on for years, and they've certainly not helped us at all. So I don't know how much worse, it could possibly get, but that's always a possibility of what we're watching. Now, there's one other thing that you need to pay attention to on a a global front, and that's, take a look here. I'm going to post the ETF for the emerging markets, folks. Now this is nothing more than a chart. I know nothing about the fundamentals. I have never traded this ETF. I have no reason to trade it, but someone brought it to my attention, and I wanted just to point out where we are now. If you notice that the low that we made back in January of 2017, the low that we made just 2 days ago in the EM was exactly 61% of that move, came very close to the 50%, but it was perfect to the low in 2017. If you'll notice really closely on the very far right, where we are trading right now, you can see a 3 drive to a bottom pattern. Drive 1, rally, drive 2, rally, and then drive 3, stopping right at the 61% retrace level. This tells you that it's a very, very low risk in buying the EEM. And this is no different than the same pattern that we've seen in Alibaba, only Alibaba was a daily pattern. The wheat happens to be a daily pattern, but a 3 drive pattern is very, very good. Now this morning, because we're having this hurricane in North Carolina, I called my mentor and very dear friend, John Hill, who just had his 92nd birthday just recently. And John said he was very safe. Of course, he's in the mountains up there in Hendersonville, North Carolina. But we were chatting about the old days and stuff. But John still has a few copies of his book, Commodity Trend Analysis from 1966. I lived and died off that book, folks, when I first got hold of it. And if you want to add a really great book to your collection, I think it's probably $40 maybe, but it's a paperback, but it's got some great charts. All these things came from the old books that John has in his library by George Cole, Wyckoff, Schaubacher. I mean, it's just got all kinds of great stuff in there. And, the wonderful little patterns that we look at as up thrust reversals and spring reversals and things like that. So you can get that. Just go to futurestruth.com. John still runs Futures Truth, where they bring out the people that are doing good in the business and people that are not doing so well. He also talks about them and some of the things that to keep you on the up and up of what's going on. But anyway, if you have an interest in that, just go to futurestruth.com. Now I wanted to spend just a small minute here on one other thing that we've been watching. And that is these 3 stocks. 2 stocks are the social media stocks, which are Facebook and Twitter. And you can see Facebook still heading down lower. No problem at all with that. That's another one that looks, real interesting. It appears that it wants to go, a great deal lower. Whether it's going to do that or not, remains to be seen. The next one, of course, that we want to take a look at is the Twitter, and that one still seems to be heading down also. You'll notice that 382 retracement that it made up here brings the ABCD structure down to about $20 a share, which is a good 30% lower. Whether that means anything about the overall market, you can't really say, but that's neither here nor there. Okay, just keep in mind that those are just some of the things that we're paying attention to. And the final one, of course, is Tesla. And, of course, that'll be the one that I have a hard time finding. But hopefully we will find it, and then I'll be able to bring it up here, and then we'll be able to look at it. Nope, let's see where we are here. Well, it doesn't appear that Tesla is going to be hiding from me, and I don't want to spend a whole lot of time looking for it. So let's just move on, to the next one and see what the next chart is that we really want to cover in here. And if you'll give me 1 second, I'll get it up because we need to get to the currencies. There's big things happening in the currencies. We're going to start out this morning here with this Japanese yen. You can see here the Japanese yen has, we made a little Gartley at the end of, middle of last week, right down there at that 110 and change level, 110.34. We're now trading above 112. The ABCD structure on this takes it a little bit higher. So it's going to be interesting if we get above if we should get above 113 in the end, folks. This thing could really, really move because that retracement that we had in August was nothing more than a 382 retracement of that March low. And if that's all the retracement that you get, wow. that's a really powerful chart. So pay very, very close attention, to that one also, because it is, I believe, very, very important as we look at these things. You remember yesterday from when we were talking about the dollar index that we were looking for the market to have a pullback, and boy, did we get a pullback. You'll be able to see here, I haven't updated the chart yet, but it's trading right at that bottom line there that we posted in here in the newsletter this past week, and that is at 94.05. But you can see the ABCD structure on this takes you down to 93.45. Now this is why this is so very important, because when it hits this 94, I think we're trading right around 94.05 right now. If this level holds, this has got a chance to still move. So we're going to take a break here, and we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and we've had a question about sugar the sweet. So you can see the October sugar chart. Here is you can see the big ABCD pattern. You'll notice that it was 10 weeks down between the A leg and the B leg. Between the C leg and the D leg was 10 weeks down. Boys and girls, you can't make that stuff up. Look at the 3 drive to a bottom pattern into the eclipse into August 22nd. You know, we had a tremendous rally here. You'll never guess where the rally ended, folks. It was exactly the same way. If it's ended, we don't know if it has or not, but it's down pretty sharply this morning. The BC swing and the D swing with the new swing that we got up here at this 111.90, those were exactly equal to the tick. So maybe there is something to technical analysis at all. I don't know, but this sugar sure acting technically about as nice as you could be. Now, I believe that this 3 drive to a bottom pattern in the big ABCD could lead to something bigger. So what I'm going to be doing now is to be following for a possible, you know, a good a possible place to buy. And of course, the people at TFNN are reminding me that if you ever get the urge to trade sugar, go lay down on the couch until the urge goes away. That was actually sugar, coffee, and cocoa. It was really for cocoa, coffee, and cotton, not so much sugar. I wasn't involved in sugar back in 1973 and 74, but cocoa, I have not traded cocoa in 40 years. I've not traded coffee in 40 years. I have not traded orange juice in 40 years, and I will not plan on trading any of those. Sugar, I do, however, there's nothing wrong with trading coffee. There's nothing wrong with trading cocoa. And the reason why it's better now is because you've got a chance here because it's all electronic. You don't have to work with the floor traders. Back in the years ago, the floor traders, I mean, everybody in the orange juice pit that filled orders was related. They were either brothers, sisters, siblings, cousins, uncles, the whole pit. You know, and it was pretty much the same thing in the coffee market. So, you know, that's the main thing to take a look at. So whether that's right or not, you know, we'll see what's happening. So we'll see whether that's going to be going or not. We'll have to wait and see. Anyway, I just hope that helps. Anyway, I believe that we're going to get a little pullback here in this. Hold on, in the. I got to do 2 things at once here in the sugar, and when that happens, someone's asked me to take a look here at natural gas, and let's just get this up here to take a look at it here for the old natural gas, and then we will bring it up so everybody to see it. It's having a little pullback, I guess, because the storm appears not to be nearly as bad. Yeah, it's a pretty good sell-off, as a matter of fact. It's not nearly as bad as it might be in the Carolinas and stuff, but you know, it's still a little bit early. Let's bring this chart up so you folks can take a quick look at it, and you'll be able to see there's your natural gas. Each of those rallies, the rally that we had in early September, you know, and it's really they're pretty much exactly equal, and you know, we're below the 78% level this morning, folks. That's a bad sign. It, to me, means that this natural gas, boy, when you get a hurricane and you can't get natural gas to rally more than 10 cents, that's trouble in River City, folks. I don't want anything to do with that. That means the news is not nearly as well as it could be. So keep in mind that that's what's going on here. So pay attention to it. It'll be interesting to see, you know, what happens from these levels, but it's still real early. We got a Friday and an up week. It's going to be really hard for the stocks to close lower today just because of the fact that it's lower trading. You know, but actually the trading should be okay now because we're over the holidays and we're back into the fall, so there shouldn't be any holiday trading now. So trading should start to pick up, with the exception of the fact that we're in the Jewish holiday period from Rosh Hashanah to Yom Kippur, and of course the high holy days. You know, they come in later here on the 19th of September. So that's only, what, 5 days away. That'll be next Wednesday. But there will be a lighter volume, but not a whole lot, just a little bit of what we're watching. Let's take a look at a couple of these currencies that I think are important to pay attention to. You'll notice here, folks, you'll see that the Canadian dollar did pretty much what we expected in the newsletter this past week. We had a 61% retracement after we had the 3 drive to a bottom down there at 129. We rallied 3 handles up to 132, which was an exact 61% retracement, and now we're starting to come down. Ow. Wow, some really bad noise hit my earphone. Shut the front door and raise the rent. The the low that we made yesterday in the Canadian dollar was right at a 78% retracement. So I don't know what happened to my earphones, but a really sharp noise came in. It must be that bugging the old lines again from Langley, but who knows. Anyway, keep an eye on this Canadian dollar, because any move below that 129 area in that Canadian dollar is going to set up a very large ABCD pattern on the downside, and you don't want to be trying to buy that, because that means it's going to go a whole lot lower, and you don't want to get involved with that. Now we're having a little bit of divergence in the market. Let's just take a look at the big market leader. All this time since 2009, on March the 9th, when it bottomed, the leader all the way up has been the Russell 2000. As you can see, we actually topped here on September the 3rd in the Russell 2000. We come down. Yesterday we had a little bit of a rally. I think we closed about unchanged, with the Dow being up 147. So the Russell is showing just a little bit of weakness, much like what we saw in 2007. Whether that's going to mean anything or not, remains to be seen. So we need to keep an eye on that, because it could be something to really take a look at. Now, finally, as God willing, I did come up with the old Tesla chart. So let's take a look here at Tesla, because this is another one that we were watching along with Twitter and along with Facebook. They all had those 382 rallies, and you can see what's happened with Tesla over the last 5 days. We got down to 255. We rallied all the way up to 290, and that was a 61% retracement off the 382, which came in on August the 20th, and that sets up a double ABCD pattern in Tesla down around 226. And with them losing as many executives as they're losing, it's going to be difficult to turn it around. But Elon Musk has been known as the magic man, so he could certainly do that. And hey, we got a caller in the line. Well, my next subject, which is the Treasury bonds. Mr. Z, how you doing this morning?
Larry, I'm doing very good. Sounds like you're doing well. No monsoons out in Tucson right now. So everything looks good out your way.
Today is actually the last day for the monsoon. Sometimes it goes a day or so or a week afterwards, but the rains are pretty much over, and that's what we're watching anyway. But let's talk about these Treasury bonds, John, because I've been very bearish, and I'll put up the chart. This is a really nasty chart, because as you can see here, we've broken the low of the right shoulder on a head and shoulders pattern. And that's a stay. John, can you stay with us till after the break?
I'm going to stay put. Thank you.
Hey, stay there. Thank you very much. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back. We're talking with Mr. Z from Philadelphia about the Treasury bonds. John, fire away. What's your question?
Yes, sir, Larry. Just for a review for me, you, and your listeners, you spoke at length with Bill Meridian back early August. Therein, Bill repeated what he'd shared before, namely, July and August, 2 months out of the calendar year, are seasonally amongst the strongest for Treasury bond futures, Treasury bonds themselves. Lo and behold, there was a tradable low end of July, and the month of August was higher. So the market behaved as it has, on average, seasonally done. Somewhere right around August 31st, I put on a bond short, made a couple of bucks. Full disclosure, I've traded it on the short side poorly since August 31st. Put on a short, covered it, and then forgot to re-short it on a bounce, and then I am short from yesterday, just like an hour after the 30-year Treasury auction that came out at 1 o'clock on Thursday, when the bonds didn't lift after that. They often do. I took that as a sign maybe it's a low-risk shorts. So I'm short. I'm holding a shorts. We're now down at new lows for the week at 141.20 on the December bond futures. I would appreciate your assistance, please, pulling up the 4-hour chart as you often do, and show me what pattern you see that can give me some confidence to hang on to this short. I tell you, I'm always reminded of Douglas's 4 fears, and I'm dealing with one of those fears. I forget which one of them right now. And I'm dealing with this fear of fighting off the temptation to cover a short at a gain, and I don't want to miss a big gain by covering a short at a small gain. So if you could do that 4-hour chart, give some commentary, I'd appreciate it.
Well, John, looking at this chart that I just posted up of the Treasury bonds, we're breaking down of the head and shoulders pattern. That in itself is very bearish. But if you stop and think what Bill Meridian told us, that the time for July and August was its strongest seasonal time, and yet the market was not able to rise during its strongest seasonal time. And now we're coming into an area where it's not nearly as positive, and it's starting to drop. So it appears that there's something out there acting like a magnet pulling down bonds, i.e. higher interest rates, whether it's the economic environment with tariffs or whatever it could possibly be, but the market is not following the normal seasonality. That in itself is a big red flag, and the fact that it's breaking this head and shoulders pattern is another caveat to say, wow, pretty hard to be long bonds in here. Now, maybe it changes and turns around and rallies straight up from here, but it certainly doesn't look like it as we speak today.
I appreciate that. I'm looking at your daily chart on Tiger TV. Thank you for that. Any chance of pulling up the 4-hour chart and letting us take a look at what that says or reveals, please?
John, I would like to, but there's an extra charge with that. Oh, TFNN just told me that they're going to forego the extra charge for you because you're such a nice guy. So just give me 1 second, and we'll get the 4-hour chart up here to take a look at it. It's basically showing, well, it's actually showing a big ABCD here. You're right, John. It does show something a little different, and we could be. Yeah, we are showing an ABCD down here just a tad lower around 140, 110. So keep an eye on that. That could be, and we have a little 3 drive to a bottom there too. So there might be a spot here where we get a little bit of a bounce. I don't think it'll be much, but there is an ABCD. The fact is, since we're here on the line, let's just draw this in for the folks so they can actually see the old ABCD as it's coming in. There we go. And we'll get it up here so they can all see it together. And you'll be able to take a look at it. You'll see it comes in right around that 141.12 level, and that's the big ABCD going back from July down to August, up into late August, and then down to where we are right now. So that's going to be the key level. But John, anything below 141, just look up in the sky and say good night, because this thing is not going to rally much. I mean, it's got very bearish tendencies. I mean, the key, John, you got the strongest seasonal you can possibly get at a major support level, beautiful head and shoulders pattern, and all of it failed. There's just too much negativity there to make that seasonal work. That's the way it looks from my perspective.
Yeah. I'll just I offer our thoughts in hopes of providing clarity. The seasonal cycles. In fact, it appears to me that the bond futures contract is doing precisely what the seasonals would argue, namely, and I'll just go back and repeat, I don't work with the seasonals and the cycles as well as people like Bill Meridian do, but I just repeat what he said. July, August is a seasonal period. Well, lo and behold, the market held up, and actually the month of August did rally, but you got to the end of August, we were making a high. That is the end of the seasonal strength period, seasonally, according to Bill. So the fact that you topped right there, Labor Day, roughly, makes perfect sense from a seasonal average perspective. So the decline here says to me, I'm just looking at the market action itself and saying, oh, goodness gracious. Bill's cycle says rally August, got the rally August, get to September, there's no seasonal strength left. What's the market likely to do? Do something other than go up, namely top, maybe go sideways, go down. And anyway, so thanks for that ABCD target. I'll be focused on that, and still have to decide whether to cover short ahead of the weekend or no, but thanks so much for the help. Appreciate it.
Okay, well, remember, if you have your choice of when in doubt, get out. If you have a doubt about something, you can always get back in again. So that was one of Gann's, so that's one thing that you might want to keep in mind. Okay?
I do employ that rule regularly, and I didn't used to, but that rule, that idea works in spades, I agree.
Okay. Hey, John, I want to thank you for everything you do at TFNN. By the way, we're having a sale. Not me, but Tom O'Brien's having a sale at TFNN where you can buy discounted dollars, which is really great. So if you have an interest, go to www.tfnn. It's really a good deal. And all the support you could give us here at TFNN is greatly appreciated, because it's pretty expensive to keep the radio show running and everything. And have these really great folks in the den giving us good information. It's really amazing, the quality of the trades that you guys have in the den. I look at them and I'm just amazed at how accurate some of them are. So my hat's off to you, my friend. I think you do a great job.
Larry, thank you, and thanks for your work. Hey, I'm going to ask one parting question. I will hang up and ask if you could address that, namely gold. Gold is 1207 currently. That's a decent contract. It made a high yesterday, 1218. That is, 1218 essentially is exactly matching the high at 1220. That was maybe 2 weeks ago or so. My question is that little double high, 1218, 1220 with 1207 last, is the market warning us right here and now that this gold bounce from 1167 back on August 16th is done and over with, and that price pattern is still bearish? So I appreciate your thoughts on the matter, and have a good weekend.
I'll cover it at the break. Thanks, John. Thanks for calling in.
Thank you.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart for Mr. Z there in Philadelphia about the gold. This is nothing more than a 30-minute chart. You can see here that we do have an ABCD structure coming in around 1202. That would be down $17 from the high, which is 1/2 of the harmonic number that we're looking at in gold. Longer term, Mr. Z, this is a very, very bullish chart in my opinion. I cover it extensively in the newsletter every week. And if we'll take just a short minute here at the end of the show today to take a look at the silver market, That's been very good to us this week. We rallied well over 40 cents. We got out of silver yesterday, mainly because of that ABCD pattern that you can see that formed up there at around 1436. And what we're looking at now is to rebuy the silver if we get down around the 1410 level. And as you can see, that is also an ABCD pattern. Remember that the harmonic number in silver is 36 cents, and it's exactly what we rallied, folks, from the bottom to the top was 36 cents. So you want to see a nice retracement down to the 61% retracement down there at 1411, down about 10 cents from where we are right now. I think that'll be a nice pattern completing in silver. Remember, these patterns fail sometimes, but they always work sometimes. But keep in mind that you're the one that takes the responsibility to protect your keister, because if you don't, you're going to get bitten by the trading gods, and boy, they have really sharp teeth if you don't follow the rules. And that's a very important thing to remember. Next week, we're going to have our good friend Stan Harley on the line, and hopefully Bill Meridian. Both of those are scheduled to come up, God willing, so we'll see how that works. So live every day in an attitude of gratitude, and may God work, and may God bless. And thank goodness for the hurricane wasn't as bad so far, and keep your prayers and help out to those folks, because it could always happen to us. That's always something that you got to keep in mind. For there, but for the grace of God go I.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!